Hey everybody, hope everyone is doing well and had a good day. And in this video, I will review the Emini 5-minute chart for Thursday, July 31st, 2025. Today was the last day of the month, so I want to quickly talk about the monthly chart. We'll notice we may have an expanding triangle here. Here's a low, lower low, lower low, high, higher high, and higher high. The bulls broke out to a new all-time high, but the bar is much smaller than the past two bull bars. The reversal and follow-through is fairly strong for the bulls, with good, significantly especially these two uniform size bars, but these bars are still within the trading range, and when we finally broke out to a new high, we got a much smaller bar. It's good for the bulls that the bar closed above its midpoint and closed at a new all-time high. 4-bar micro channel strong enough that the first reversal will probably be minor, so the bears will likely need at least a micro double top to reverse this. But it looks like the market might be in an expanding triangle late in a bull trend, so we might be in breakout mode. This could be the start of a trading range, a bigger trading range that eventually has to test back down maybe to around 5,000, back down where this sell-off occurred. And it's possible that this spike in channel evolves into a trading range, so we might be high in a trading range at this point. Even though this bar closed weak, the bears moved the price a very big distance, and that's going to cause disappointment at the highs. The traders who bought at the highs, disappointed by the sell-off, probably become sellers, and we get resistance at the highs because of the depth of this pullback. For the daily chart going into the day, the market has been in a bull trend for many bars, so we might be late in a bull trend. So possibly 3 big pushes up, 1, 2, 3. This breakout probably resets the count to some degree, but after this pullback, we got another couple of legs up. So bull breakout, bull flag, high 3 at the moving average, breakout, pullback, second leg. Now we're late in a bull trend. We're getting overlapping bars, doji bar, bull breakout but bad follow through, and then a big outside down bar with follow through selling. So as far as yesterday goes, as far as a buy signal, probably sellers above yesterday's high. The bar is fairly big, forcing me to buy at the top of what's probably developing into a trading range or a bull flag. But as far as below the bar, also probably buyers below the bar, testing near this breakout point. And we had 4 or 5 bars up, so the first reversal probably will be minor, testing support, and then we may bounce and test the highs before we get any reversal. The problem up here, if you're buying up here, remember, if you're buying far above the moving average, as a bull, you're buying momentum because price is above the moving average. So you're buying, your premise is that we're in a bull trend and there's momentum. But as soon as you start getting doji bars and overlapping bars, traders start to reduce their risk. The stop is far. The stop might be down here. At a minimum, it's probably here. The stop is far. Risk is big. And if you start losing momentum, it's really hard to justify buying at the highs when you don't have momentum. So what happens? The bulls start to reduce their risk and take profits, sell out of longs, and they want to buy lower. They want to buy a pullback. They want to buy breakout points. They want to buy at the moving average. And bears are going to start selling for, at least for scalps. So traders start selling when we get far above the moving average. And then going into today, if we just look at the RTH chart, the regular trading hours, yesterday was an expanding triangle, which could be drawn something like that. And obviously we had a big breakout below the bear channel line and then reversal back up to the bull channel line. But going into the open of the day, after this big rally, first of all, the rally, lots of big consecutive bull bars. That's good for the bulls. But it's following this big sell-off, so it's big down, big up. The market's in a trading range. You can see right when we get to the high of the prior day, or I guess the bar 81 was the high of the day. But once we broke out to a new high, we lost the momentum and we got a bear bar, a bar closing below its midpoint. And you have the bull channel line from the expanding triangle, so there might be sellers above. We talked about how the prior day is a bad buy signal on the daily chart. There's probably sellers above yesterday's high. So the expectation is that yesterday's high is resistance. There's sellers at and above yesterday's high. But strong enough momentum into the close of the prior day, the bulls probably need some sort of second leg because of all the trapped traders from the bullish momentum. On the open, we got a 3-bar micro channel, but bar 1 sold off and pulled back intra-bar. Bar 2 was an inside bar, and then bar 3, a bear breakout bar, but small with a tail. So this is already 2 pushes down. 1, pause, 2. And we're testing the bull channel line. This is one way to draw it. So we get one close below, 3-bar micro channel, probably sellers above, and second leg down likely. But the sellers might not come in until above bar 2 or even above bar 1. Bar 3 is a small bar and it has a tail. The traders would prefer to sell above the last strong bear bar like bar 2. But the reason I say we might have to go above bar 1 is because bar 1 usually is not the high or the low of the day. In general, there's about a 20% chance that bar 1 remains the high of the day, or the low of the day, in this case the high. Also, about 80% of days have a trading range open, not a trend from the open. Up to this point, up to bar 3, technically it's a bear trend from the open. But as we get more information, it's more likely that it will not be a bear trend from the open. And the probabilities are that it's going to be a trading range open and that bar 1 will not remain the high of the day. Reversal outside up on bar 4. Now, I said there's probably sellers above the 3-bar micro channel, but after seeing bar 4 might be disappointing enough for the bears to buy back shorts and look to sell higher. I also said the rally, the momentum from the close of yesterday, probably needs a second leg. So this might be a pullback before a second leg up. But again, after 3 bars down, there's probably sellers above, whether they're above bar 2 or bar 1. So the bulls buying are probably buying for a scalp. The bulls buying here are taking a chance because we're attempting to break out above a bull channel line in an expanding triangle. So low probability buy up here. There might be a scalp, but the upside might be limited. And then a strong bar on 5, so reversal and follow through 4 and 5. Good for the bulls, but we're still within the range of bars 1 through 3. So let's see what happens at a new high of the day above bar 1. But so far good for the bulls. It's a strong bar, and there's a micro gap from the high of bar 4 to the close of bar 5. And then disappointing follow through on 6. So now we have a double top, 1 and 6. 3-bar micro channel, big down, big up, similar to here, but on a smaller scale. And this is a high 1 buy, but again, it's at the top of a trading range, an expanding triangle. and we can see it on the daily chart. We're above yesterday's high. We have a high one buy, or if you're buying at resistance, and you're taking a lower probability trade. Also, 1 through 3 probably still needs a second leg down, so we might be finding sellers above 1 for a second leg down. But 4 and 5 strong enough that if you are selling below 6, the expectation the market will not go straight down. It'll probably hesitate, and the bulls may get some kind of a second leg before we reverse back down. But to me, it looks like the market's in a trading range overall, and we're high in the range, and there's probably sellers up here. Also, remember what I said about the daily chart. For traders to buy this far above the moving average, they need momentum. They need above average bullishness. And so far we have 3 bars down, 3 bars up at the top of an expanding triangle, attempting to break out of an expanding triangle. And this is not above average bullishness price action. This looks like a trading range, 3 bars down, 3 bars up. So to buy up here, way above the average, also high in the big picture, like we talked about the daily chart, you can see here on the 5-minute, it's really not ideal. So probably we'll hesitate, and 4 through 6 probably needs a small second leg, but the buyers may not come in until maybe the high of bar 4 at that gap. And 6 is a reasonable double top sell signal for the bears. So we hesitate, the bulls get a small second leg. We pulled back below 6, and 7 went up and tested the highs. We did not quite get to the highs, but this is a minimum second leg for the bulls. They got 1 more bar in their direction. And the expectation is that we'd hesitate here and then probably go lower. 9 bear breakout, but big tail and not closing below the bars to the left. It's a bad buy signal, bad stop order buy. A bad stop order buy is a good limit order sell, so probably higher probability sell above bar 9, which makes bar 10 also probably a bad buy. Sell to close 10, sell above 10, expecting a second leg down from 1 through 3. Also, if you're betting that the big picture is a trading range and you're trading mean reversion, the reversion to the mean might be somewhere in the middle of yesterday's range, then clearly we're in the sell zone. We're above yesterday's high. And the mean is somewhere down here. The 20 EMA on the 5-minute is one measure of average. This is the 60-minute chart EMA plotted on the 5-minute chart. So there are magnets below. And this is not above average bullishness. So to buy here is not ideal. Another bear breakout 11, probably sellers above. Might be sell to close at this point. The bulls got their hesitation, and it looks like they're weak and they're failing. 3-bar micro channel, 12 might be sell to close. There's room for a scalp to the moving average. There's probably buyers below 4 if we get there. But we'll see how the approach is. So we pulled back above 12, but sellers above 12, it was a bad buy. 13, reasonable stop order sell. There's still room for a scalp to the moving average. We have not had a really decent bull bar other than bar 5 today. So the buying pressure really isn't there. Bad buy signal 14, sell above. Bad buy signal 15, sell above. Bulls will argue. Bull breakout, high 1, high 2, double bottom bull flag 15, but the channel down is tight. And the signal bar is weak. 16, another bad buy signal. The channel down continues. This is good price control and time control by the bears, and this is not climactic. You can argue it's 3 pushes down, 1, 2, 3, but this is a minor wedge, and it's a breakout on a higher time frame. So maybe the market bounces here. We're testing the moving average support. It's 3 pushes down. We're getting close to the bar 4 low, the bar 3 low. So there is support. But the reversal is probably going to be minor. Again, this is a breakout on a higher time frame. So this is a tight channel down. The odds are there are sellers above 16, and the bears will probably get a second leg down. And then instead we broke below the wedge. So 17 might be a leg count reset. We got 3 legs down, 1, 2, 3, and then a breakout far below the channel line. What about the fact that 25% of channel line breakouts succeed? This is a bear channel line and a breakout of the bear channel line. The only problem is that the big picture makes sense for selling. We're still high in the range, and the wedge, or the channel we're talking about, is a minor wedge. Like I said, it's a breakout on a higher time frame. Where is the buying pressure? Where are the bull bars? So as far as buying, if you're looking for a two-legged correction or a reversal after the wedge, where are the bull bars? They don't exist. But more importantly, the big picture context makes sense for selling. Follow through. 18 probably sell the close. Very likely that the bears get some kind of a measure move down, whether it's a measuring gap, which 18 is basically already at. Maybe we get a measured move, 17 and 18. And there are magnets from yesterday as well. So we have breakout points from the rally, like the bar 69 high. And 75 was a bad stop order buy signal bar, but it produced this big rally. And usually signal bars like that get retested. Instead of being a strong signal bar, like a bull bar closing near its high, it was a doji closing below its midpoint. So this probably needs to be retested. But 18 probably sell the close, probably lower prices likely. 19, the market pulls back. This is POC, point of clarity. Whenever something is obvious, like it's sell the close, 17, 18, always in short, the market usually pauses before continuing. So if you sell the close 18, you have to be willing to sit through a pullback, and maybe you scale in, sell above a bear bar like 18. Your stop is far, maybe it's above 13 or it's above 17. Your stop is not above 18. That would be a skunk stop. And then a low one short, probably okay to sell. The channel down is tight. The bears are breaking out, crossing the moving average. And this might be a broad trading range. Big down, big up, possibly big down again. 21, a strong breakout bar for the bears. Now it's leg 2, and we'll start to enter a channel phase now that 19 pulled back above 18. So there might be profit taking from bar 21. It's a big, strong bear bar, but it might attract profit taking from the bears. So pullback, be prepared for a pullback. Traders, the way bears trade in a channel is they sell pullbacks and they take profits on breakouts to new lows or at the close of strong bear bars like 21. And they'll look to sell again on pullbacks. Maybe we have to test the low of 19, the breakout point. Pause bar 22, bad buy signal, sellers above. Low 1 short 23, but it would be leg 1, leg 2, pullback, leg 3. So there might be buyers below, but it's a minor reversal. This is more profit taking by the bears than aggressive buying by the bulls. This buying pressure, look at the buying pressure basically all day. Like I said, the bulls had one decent bar on bar 5. Even 19 had a tail and was overlapping 18 by about 95%. So the buying pressure today not strong. So okay to take profits, but really aggressive to be buying. Remember, if you're trading breakouts and second legs, it can keep you out of trouble in situations like this. You should not be looking to buy in a situation like this. Where is the bull breakout that you're looking to capture a second leg of? It doesn't exist unless you're playing the big breakout here. Maybe it's a 50% pullback of this rally. and you expect a second leg up. But even still, look at the approach. It's strong. You need probably a micro double bottom at a minimum before buying. And 24 is that micro double bottom. We went down, up, and 24 is a strong signal bar after what might be 1, 2, an attempt at a third leg down. So we might pull back here. 24 is a strong bar, and always in bears, exit above 24, bulls can buy. But buying is more aggressive because the channel down is tight. And this entire leg down to 22 is a breakout on a higher time frame that is probably going to get a second leg down. So any reversal here by the bulls will probably be minor, and the low of 22 will be a magnet that the bears will want to test. Breakout follow through on 25, testing that breakout point, but the approach was strong. The traders selling here with limit orders, they either cancel their order or they're quick to exit because 24.25 needs a second leg up, so there's probably buyers below 25. And the bulls got more follow through, crossing the moving average, 3-bar micro channel, technically 5 bars without a pullback, strong enough up for a second leg, and a decent trendline break of the tight channel. So this now needs a second leg up. But if you compare the strength and the size of the breakouts, the bear breakout is still clearly much stronger than the bull breakout. Another bull bar, but smaller bar, and testing another breakout point, the bar 4 low. I said if we got here, there'd probably be buyers, but instead the market broke straight through that support level, and that's going to create resistance. 28 bear bar, but after 5 or 6 bars up and a relatively strong breakout, this is probably a bad sell. It's a low probability sell. If you're selling below 28, stop above 28, your risk is small and your potential reward is big relative to the risk, but that means you have low probability, and the probability is that the bull breakout will get a second leg and possibly even a third leg. But this is still a minor reversal until we get above a major lower high, which is all the way up here. Is 19 a major lower high? It might be. Some traders will argue this is a major lower high because we broke out to a new low. But to me, the more major lower high is bar 13, or way up here. So we might be in a trading range at this point, but to me it seems like the bears are still overall in control. This breakout might simply be the absence of bears selling, which causes a buy vacuum testing resistance. Because again, as long as we are below the 50% pullback, the probability favors a test of the lows before a stop run for the bears, and we're still below that 50%. But probably buyers below 28. High 1, probably okay for a scalp for the bulls. Probably at least get above the bar 27 high. And then 30 breaking out, but testing that breakout point, the bar 4 low, probably resistance here. Now you're trading leg 2, counter trend. And the breakout of the trend line is strong. It's hard to draw the trend line. Maybe it's something like that. Clearly broke strongly above the bear trend line, but we probably need to retest the lows. So buying up here, you might be buying high in a developing trading range. The market can test all the way back down to the 22 low. So a low 2, second reversal, 31. Still a low probability sell. Bulls see a spike, pull back, channel phase, so they'll buy below bars, take profits above bars, which is what's happening here. But now we have leg 3, so 1, pull back, 2, pull back, 3. And the bulls don't clearly break above this resistance. We're getting overlapping bars. We do have a bar closing above the resistance, maybe 2 bars closing above, but 32 overlapping 31, 33 still within the range of 31, so nothing clearly breaking out above. And even if they do, we're still at about a 50% pullback of this entire sell-off. So it's really breakout mode, closer to 50-50 here. And until the bulls break strongly above the 50% pullback, the odds still favor a test of the lows. If they pull back to about 2/3 of this leg down, then the probability becomes closer to 50-50 that we get to the stop location for the bears before we get to the lows, a new low. 32, 33, 34, these three bars are kind of representing what we see in the bigger picture here. This is 3 legs up on a smaller time frame in the third leg. So this is leg 1, leg 2, leg 3, and here it's a reversal up, leg 1, pull back, leg 2, and then leg 3, and reversing down, 34. 34, it's a 3-bar micro channel, but because it's a late leg against a strong bear breakout, that's probably going to get a second leg, and the bulls have a completed spike and channel structure. 34 might be a better sell the close bar, where maybe a trader sells the close 34, puts a stop and measure move up, and they look for a target at the low of 32, where the bulls theoretically have a stop. Another bar added to the channel, but it's a trading range bar, and it's almost an inside bar, so lots of overlap. Still probably better to sell here. 36 bulls getting a breakout, but it's a breakout of a bull channel line, and again it's counter trend. If we look to the left at support and resistance, breakout 16, follow through 17, the low of 15 is resistance, and that's where bar 36 is testing. So dueling lines, it's a wedge channel, and it's the low of 15 resistance. So 37 really needs to break above here. Otherwise, this is probably resistance in a developing trading range, and this will probably end up being a third leg high in the range before a reversal. And 37 is bad follow through for the bulls. Continuing sideways, it's kind of like the daily chart again, where if you're paying above the average price, you really want above average bullishness, but we're getting dojis and overlap in leg 3 after a big sell-off. So this probably is not an ideal place to be buying. It might be better to look to buy after a pullback, after a 2-legged correction, maybe down here. Because of the market cycle, spike and channel, the channel evolves into a trading range. We could test all the way down here. So buying up here, not ideal, but also difficult to start selling if you're trading breakouts and second legs. Where is the bear breakout? It doesn't exist. Micro double top 39. Bulls probably exit below 39. Aggressive bears can sell. Other bears wait for the breakout, then maybe they sell the close 40, sell above 40. This is one of those trades that if you can sell above 40, that's great, but it also might be a little greedy. 40 is a decent breakout bar, and the context is good. Spike and channel. Bears need a second leg down. And the breakout bar broke far below the bars to the left, even though it didn't close strong. It's a breakout pullback in the same bar, which is why selling the close is reasonable. Inside bar 41, really not ideal for buying, and still okay to be short. This does not invalidate the premise for the bears, but for the bulls, maybe you have a one leg out of 2 in the correction, but the spike and channel is probably going to correct further and evolve into a trading range. And it looks like we have 1 leg down, maybe a pullback before a second leg down, probably sellers above 41. 42, the market's entering a tight trading range. Probably always in short because of context. The big sell-off, and then the big rally, big down, big up. But it's kind of like I said over here. The bulls did not have a credible signal bar for the reversal up. Bar 23 was a bad buy signal, but it resulted in a decent rally. So the high of 23 is a magnet, and it's probably going to get tested because this looks like it's a trading range day, not any kind of trend day. So 42, at this point, probably better to be short than long. Bear breakout 43. Reasonable to sell the close, expecting lower prices. This might be the give up bar, bulls giving up. Do you buy the close 43 because spike in channel, two-legged correction? I think it's too aggressive to do that. I think at a minimum, we're going to test the low of 29. So does it make sense to buy 43 if you think we're going at least a little bit lower? No, it doesn't make sense to buy if you think it's going lower. So traders are probably not buying the close 43. Probably have to go a little lower before we find buyers. And there might be support here, but the approach is stronger than the bulls would have liked. And the big picture still suggests that the bears need a second leg down and the bulls have a completed structure. Inside bar, pulling back, testing the moving average, breakout point, the lows of the prior bars. Weak buy signal, so sellers above 44, and it might be sell to close 44 as well if you're swing trading. 45 low 1, bears can sell looking for a swing down, lower prices, and really nothing to buy. 45 is a bad stop order buy signal. 46 breaking below that low, bulls hoping the market would hold support there at the spike pullback start of the channel, but instead we broke below. 3 pushes down, but similar to up here, the channel is tight, the buying pressure is weak, and there's really no decent bull bars along the way. So 3 pushes, sure there might be a minor reversal and a correction, but it could be very limited, like over here, where instead we just get the breakout. And that's ultimately what happened. The market got vacuumed down to the lows, 22, got tested. Strong breakout to a new low on 48. Not as much distance between this low and this close as the bears would want, but the breakout is strong enough for a second leg. The problem, it looks like a broad bear channel. And if it is a broad bear channel, then we might be testing a buy zone where traders look to take profits. So the downside here might be limited, and bears might look to take profits here. So we're testing the channel end the way I have it drawn. We're also testing the breakout point, the bar 69 high. So reasons to buy to take profits here, but really too aggressive to be buying. Again, if you're trading breakouts and second legs, there's no bull breakout for you to buy here. So it's okay to buy to take profits if you're short, but there's really no reason to buy if you're trading breakouts and second legs. Bull breakout 49, but probably, or 50, but probably minor. But we may have to pull back if it is a broad channel, which it looks like it is. We may pull back to the midpoint of the last leg, maybe even deeper. So the bulls do have room to that midpoint. They have room to the moving averages. But this is probably minor. And the always in direction is short. It's probably better to look to go short to capture second legs. Bulls get breakout and follow through, but 51 inside bar, trading range bar. Not ideal follow through, not ideal breakout. Breaking above one bear bar, but it was weak, and staying below this strong bear bar 48. So this looks like a minor reversal. 49 through 51 might need a second leg, but it's a weak breakout. It's a minor reversal. 52 outside down. If there are traders looking to buy, they'll probably buy lower, like below 50 or below 49 at the channel line or at the breakout point support. And then 53 breaking out to a new low, but probably support down here. Like I said, okay to buy to take profits if you're a bear, but to buy to go long is aggressive. And if you're trading breakouts and second legs, you don't really have a bull breakout to be looking to capture a second leg of. So more follow through selling. 54, probably sellers above. It's a bad buy signal. 55 broke the bear trend line. 52 through 54. Now we have a low one, but it might be 3 legs down. 1, 2, 3. Breaking out of a channel, trying to break below support. And there's layers of support. Another bear breakout, the channel down is tight, and we're testing support again. So there might be profit taking down here, but really nothing to buy. And more follow through selling. Testing that bad stop order signal bar 75, so we might bounce here, but really not a reason to buy. 58 testing yesterday's low, so at that point the day has gone outside down. And it's kind of typical when you have an expanding triangle. An outside bar is an expanding triangle. If you look at the past 2 days, that's what we've had. We've had lower lows and higher highs. So today being an outside day makes a lot of sense. So 58 testing yesterday's low and then getting a strong follow through bar. So 58 strong reversal and follow through, strong enough for a second leg up. Look at the difference between 49 and 50 and 58, 59. 49, it's a buy reversal bar because the bar closed above its midpoint, but it had a bear body, so the bears closed the bar below its open. And 50, bull trend bar, but let's see, maybe a little less than half the bar overlapping the prior bar and a big tail on top of the bar. Compare that to 58, 59. 58, bull reversal bar closing on its high, although it's a small body, and 59, a bull trend bar closing near its high with very little overlap with the prior bar. Contextually, it's also stronger for the bulls. Down here, testing support, layers of support, the bad buy signal, the low of yesterday. Maybe it's 3 pushes down, 1, 2, 3, nested, 1, 2, 3. So this had more going for it for traders looking to buy. So here is more reasonable to look to buy for a second leg rather than over here. 60, more strong follow through buying by the close for the bulls, 3-bar micro channel, second leg up likely. If it is a broad bear channel, then we could pull back to the midpoint of the last leg, which is up here near the moving average. So there is room for the bulls for higher prices. But finding resistance at the moving average, strong reversal, but compared to the big sell-off, this is still probably minor. It's enough that there's probably buyers below in the buy zone, the high 58, below 58, and the market will probably enter a trading range after this kind of a rally. But that does not mean we're not going to test the lows. The sell-off was much bigger and had a lot more strong bear bars than this reversal. But this is strong enough for a second leg up. 62, low probability sell. If you sell below 62, you're selling against a strong bull breakout. Contextually not ideal because it's testing a breakout point, it's below the moving average, but as far as the signal goes, you have some uniform sized bars closing near their highs and micro gaps after 3 legs down, so that's all good for the bulls. Selling below 62, low probability sell. And it didn't even trigger. Same with 63. 63 inside bar, breakout mode. It's a triangle on a smaller time frame. Testing resistance. You have the midpoint of the last leg. You have the breakout point, 51, 52 lows. The moving average. Bull breakout 64, but weak. And then no follow through buying, 65. Implied second reversal, 1, too, but still a low probability sell, small risk, big reward. But good entry bar 66, higher probability if you wait for the breakout 66. Might be sell to close, sell a pullback, because if this is a trading range and if it's a broad bear channel, the market could test the lows. It could test yesterday's low again. It could test the low of 58, the channel line. And this rally could be a bull trap. And 66, if I said sell the close, it's reasonable, but also sell the pullback. 67, this is a bad buy above 66, so 67 probably sellers above. Consecutive inside bars, breakout mode, probably okay to sell if you're trading in the always in direction. You can sell below 68, but if you're selling below 68, you're taking a stop order in a tight trading range, and you should probably go for at least a reward that is twice your risk. 69 bear breakout, okay to sell the close, sell the pullback. 70, probably sell the close, sell above. It's a weak buy signal. High 2, but tight channel down, similar to over here. Like bar 12 was a high 2, but bad. And same with over here. Maybe a high 1, 41, high 2, 44. Outside down, 71. But it's 3 pushes down to support. Still some room to the downside, like the 58 high. But this might be a trading range at this point. So there might be more buyers below 71. 72 testing that breakout point. The approach is stronger than bulls wanted to see, even though it is 3 pushes. It's tight, just like over here and here. So not ideal for buying, but okay to take profits because you're in a buy zone. You're testing support. Weak reversal 73, probably sellers above. Because of the 3 pushes, you expect a minor reversal, but the wedge was only made up of about 8 bars, so the correction could be maybe 3 bars. In this case, even less. So maybe here's one leg 73, pullback, and then 75. Might be a second leg trap, sell the close. First trend line break, bears, sell the close, looking for a test of the lows. So outside down 76. But back to the buy zone. 76 is a big bar. It's possible it resets the leg count, but more clear if you wait for follow through. And of course we got it, but late in the day, so not ideal for trading it. And probably buyers at the low of 58. But the breakout fell to a new low and closed there, which is not what the bulls wanted to see. So that disappoints the traders who bought at the low of 58, and that turns the low of 58 into resistance. 78 reversing back into the range, but 76, 77 probably needs a second leg down. 78 testing breakout points, second leg down likely, so 78 might be, in theory, a bar that traders look to sell above. 79, big bull breakout, but closing well below its midpoint. The market's in a trading range. At this point, bears will argue it's still a broad channel because we're still getting lower highs and lower lows. That's going to be it for today's end of day review. Thanks everybody for watching and listening, and I hope everyone has a great night.